Welcome back, everyone, to today's emergency update on Cardano and its native token ADA. Over the last 24 hours, ADA has delivered a sharp and attention-grabbing recovery, currently trading between 28 cents and 30 cents, marking roughly a 6% bounce from its recent lows. While the market capitalization continues to hold steady around $10.4 billion, the real story lies in the explosive surge in trading activity, with volume spiking nearly 40%, signaling that investors are reacting aggressively to major developments tied to the 2026 roadmap. Today is February 16, 2026, and the Cardano market stands at a decisive make-or-break moment that could determine whether this recovery evolves into a sustained breakout or fades into another rejection within the broader downtrend. In this complete market breakdown, we're covering the latest price structure, major announcements circulating on X, and critical technical to provide a full-spectrum perspective on where ADA could head next. The ecosystem is buzzing after Charles Hoskinson confirmed a strategic partnership with LayerZero, a move that effectively removes Cardano's long-criticized isolation barrier and enables its decentralized applications to communicate trustlessly with more than 50 other blockchains, including major networks like Ethereum and Solana. This development opens the door to expanded liquidity flows, cross-chain asset transfers, and significantly enhanced ecosystem growth potential. In addition, the anticipated launch of USDCx is now officially on the horizon, positioned as an institutional-grade, zero-knowledge-powered stablecoin designed to bring compliant and deep liquidity into Cardano's DeFi landscape, something the network has long needed to compete at a higher level. Adding further momentum, the privacy-focused Midnight mainnet has been confirmed for the final week of March 2026, a launch that is being described as the AWS of privacy, to deliver enterprise-level data protection infrastructure and reportedly drawing attention from global technology leaders such as Google and Telegram. From a technical standpoint, ADA is currently attempting to break out of a long-term descending channel pattern, a structure that has constrained price action for months and typically signals extended bearish pressure. However, on the 4-hour time frame, a potential inverse head and shoulders formation is emerging, which is widely regarded as a bullish reversal setup. For this breakout to gain real credibility, ADA must secure a strong daily close above the 31-cent resistance level. If that level flips convincingly into support, upside targets open toward 34 cents and potentially 42 cents in the near term. On the downside, failure to hold the 28-cent support zone could trigger a retracement back toward the 24 to 22 range, an area considered high risk for bullish traders and one that could invalidate short-term optimism. Key indicators are currently sending mixed yet improving signals. The Relative Strength Index, RSI, sits at 52, comfortably in neutral territory, suggesting there is substantial room for upward expansion before reaching overbought conditions. Meanwhile, the MACD has printed a bullish crossover on lower timeframes, supported by growing green histogram bars that indicate strengthening positive momentum. Interestingly, despite this improving structure, the broader Fear and Greed Index remains at extreme fear at 9 out of 100, a level that historically aligns with bottoming phases where experienced investors quietly accumulate positions before broader sentiment shifts. Moving averages tell a split time frame story, as ADA is now trading above its 5-day and 10-day exponential moving averages, signaling short-term strength. Yet it remains significantly below the 200-day simple moving average near 56 cents, confirming that the longer-term bearish trend has not yet been fully reversed, and that this rally may still qualify as a relief move within a larger downtrend. Traders should also monitor CME ADA Futures activity, which launched on February 9th, as institutional hedging and derivatives positioning are increasingly influencing volatility and short-term price swings. From a strategic perspective, short-term traders may consider a buy trigger activated upon a confirmed breakout and support flip above 31 cents, with a disciplined stop-loss position near 27 cents to manage downside exposure. Long-term investors, on the other hand, view current levels as a substantial discount relative to the upcoming Voltaire governance milestones and the March midnight launch, making dollar-cost averaging a prudent strategy in an environment currently experiencing approximately 14% volatility. Overall, Cardano stands at a pivotal crossroads where strengthening fundamentals, expanding interoperability, and improving technical signals are converging, yet confirmation remains essential before declaring a full trend reversal. If you want daily Cardano updates and real-time analysis ahead of the next major move, make sure to like this video, subscribe to the channel, and turn on notifications so you never miss an update. And drop your 2026 price prediction in the comments below. Do you believe $1 is back on the table?